All right. Hello and welcome everyone to Calling All Real Estate Investors. This is a twice monthly show, live show with Caeli Ridge from Ridge Lending Group. We meet the first and third Tuesdays of the month generally, but keep an eye out in the emails that we send out for any updates. But you can always reach us by calling 855-747-4343. Or you can email us at info@ridgelendinggroup.com with any questions. And if you have any questions today during the live format, you can go ahead and pop those in the chat and then we'll get them answered as soon as possible. So today we're going to be talking about how to confirm property taxes via the county tax assessor. So I'll hand it on over to Caeli to get us going.
Thank you, Miss Carly. Guys, does Carly look any different? Does she look like she's shining at all? She is now Miss Carly Smith. She has since been married, I think, since you guys last saw her. So congratulations. I have really yet to get into it with her. She's been back for, I think, almost 3 weeks, and we have yet to really talk about it. So, but you do look like you're just the glowing bride, I can tell.
Thank you so much. It was a magical day, and it's just so crazy to have a husband.
I remember, it's funny that you say that. I remember that after I was married, it was weird to say this is my husband, right? I felt kind of older somehow. Anyway.
Yes, definitely.
Congratulations
mature.
again, honey.
Thank you.
Thank you, Miss K. Guys, I missed you. Did anybody miss me? I feel like I've been out of sorts. It feel like I was traveling a lot. Now we're back and it's year end and things are always hectic during the holidays, especially for us, I think. But this kind of my normalcy, my Tuesdays with you guys were missing. I felt it. So I'm happy to be back. Today's topic, I want to start with a couple other things first, but today's topic is courtesy of one of our clients. So Miss Jennifer, if you happen to catch this after the fact, this is for you, my friend. We're going to talk about property taxes and how to identify them and confirm them for yourselves via the county tax assessors. I'm going to share screen here in a minute and give you guys an example of where to look and what to be looking for and how some of it can be misinterpreted if you don't know what you're looking at or for, really. So we'll get to that in a second. But before we start there, I have a question for you, and I've asked Carly to create a poll for us. And for those that are going to catch this after the fact, which is the vast majority of you, if you want to just email info@Ridge Lending Group, whether you would have any need for the following, we would appreciate it. I think we'll try and do a poll in the community as well. I have been kicking around the idea of creating kind of a course, a syllabus and course, if you will, for my clients' kids, for their prodigies, for teenagers, maybe from, I would think 14 or 15 through their early, mid, late 20s, for those that have children that have either communicated any desire to get into real estate, or you have your own ambitions to get them into real estate. I've had a few people bring this to my attention, and I know that for me, I wish that I had something like that when I was younger. I have a unique situation with my kids and being able to provide it to them. Although if you were to ask either of them, they're not quite at that stage that I have any real value. So I'd have to find a stranger to educate them about things that would be important. But so anybody that has or knows anyone that has kind of teenagers, like I said, through their 20s, maybe, that would find value or use in a concentrated course. I'm thinking once or twice a week for 4 to 8 weeks. I really don't know. I'm just kind of putting this idea out there to see if there is a need. So Carly, could you throw that up there? And if you guys personally or know of anyone that you think would value from this, if you want to just answer yes or no. So again, a course on real estate, financing literacy for our children, so that when they do become viable candidates for financing, they have some information, right? They've been armed with some information that can help them make informed decisions and prepare them for getting qualified. Thank you, Ms. Carly. And if you don't have anybody, that's okay too. Okay, so 2 for 2 answered. There's not a ton here, but again, for those of you that are going to watch this after, shoot us an email, please, info@ridgelendinggroup.com. If you think that you personally, your kids or friends or whatever would have any interest in your children attending with me personally one-on-one finance literacy as it relates to real estate and mortgage investing, mortgage needs and real estate investing. Thank you. Okay, that's that for that. Let me share my screen. And I don't know how long this is going to take you guys, so I'm going to kind of zip through this, and obviously depending on Q&A afterwards, we'll say how long we spend on this. And let's get rid of that. And then if we have time left over and everybody's interested, I thought I would take a few minutes and talk about the state of affairs and what is coming down the pike. We've got the PCE results, personal consumption expenditure results, coming out on the 30th of this month, which, depending on how that reads, I can expect, or we should expect, to see some potential improvement to interest rates. I'll explain that in a minute. Let me share my screen and let's talk about how to find and confirm property taxes when vetting for your ROI and checking properties out. Where's my share? There it is. Hold on, gang. I'm smarter than I look, I swear. Where is it? There it is. Okay, share. Okay, so let's get to, I can never see, how do I hide that? I don't know how to hide that thing, and then I can't see my face. All right, so I started, I chose Florida. It's a pretty common place to invest right now. We're seeing lots and lots of interest in Florida for a variety of reasons. But I just started there. I chose Walton County. So you've got to identify, and actually, let me back up. If you guys ever need a quick look at what the property taxes are, you can always email us. Use info@ridgelandgroup.com. You can email us the property address. We have access to kind of insider information. So we have access to property profiles via our title companies that we work with closely. It would be a cost to you guys. We can run these largely for free. So if you want to send us an email, we can produce a property profile that, in addition to the property taxes, now if it's new construction, it's not going to give us the read on what the actual after completion taxes are going to be, but there's other data on there that might be useful. You're going to have an APN number on there. You're going to figure out what the title search was, who are the prior owners, even what the last mortgage related loans on the property were. So if you're trying to negotiate, for example, if you're trying to negotiate with a seller directly, the price point on a property, you can kind of get a feel for what they might owe. It'll also contain recent comps, like-kind properties that have sold in the last 6 to 12 months on this property report. So there's some good information and some other tidbits and details there. So if you guys need something like that, I mean, we couldn't just do them ad nauseum, you know, dozens and dozens a month per individual, but if something comes up, 1 or 2 or 3 a month, that you guys need a property profile, just email us an address and we'll provide that and send you a copy. Okay. Otherwise, if you want to do some of this on your own and you're looking to identify where to confirm taxes, let's say it's a turnkey scenario and you want to just confirm what the pro forma that the turnkey is provided is accurate and true, the best place to do that is going to be with the county tax assessor. Now, identifying the county is first and foremost, and then it may be called something else. As you can see here, county property appraiser is the name of this one, tax collector. So it's going to vary a little bit. You may have to do a little bit of digging, but in any case, what you'll do is you'll figure out where you need to go. It'll lead you to, I thought I had this up in a different way. Did I not do that? I guess not. Okay. So the front page, it should be pretty clear, and it'll give you, most of them are pretty easy. They're not, there's not too deep of a rabbit hole that you need to go down on most of these websites, but you're gonna be looking for property taxes. Once you find that, you're going to enter in an address. Okay. The one that I was using before, I'm just pulling an address out. This is actually a property that I used to own, and it's in Florida, so I'm using this one. And this is public record, you guys. Anybody can get to this, okay? So when you find the property that you're looking at, let's go to details, I believe it was. Okay. So the information should be laid out here. Okay, and you're going to notice there's lots and lots of different numbers here, and this will be useful for new construction. I'll come back to that in a second, but in this case, it's not new construction, it's an existing dwelling, and you can get the breakdown of what the individual property taxes are tied to, because it's not just one number. Generally, you're going to have, school, there's other sorts of state stamp taxes and different things that can be attached to and associated with the actual property. So if you, and one of the mistakes that most people make when they're trying to figure this out is they look for the millage rate. That's what these numbers are right here, the millage rate. And normally they'll find the number added by itself because, like I said, the overall millage rate, if it's not new construction, is attached to the individual taxes that each of these different things in this particular county is collecting for. And as you can see, there's a total down here. But if you'll notice, these different numbers to the right of the numbers, the assessed value, which is what it's going to be based off of, can change, right? And I can't really explain why they change. I have no idea. I think there are different caps, and there will be something too for home, for what's your face, the exemption, homeowner exemption if you live there, if it was your primary residence, which won't apply to most of you. But in any case, it's not going to be super important, just to know that they're different numbers. The millage rate percentage is based on individual numbers. In this case, most of these are on the assessed value of the property. The school taxes that are associated with the property taxes, there's some random cap. I can't explain that in this case, but most importantly, what I want to do the math for is how are we getting to this final number? So for this particular property for this year, right, making sure that you're looking at the appropriate year, the total was $7,226.15. The sum of this is not as easy as forget for a second, let's just assume that these numbers, that this 973 was the same as the rest of these in the assessed value, just for a minute. You can't just take that number and multiply it by the sum of the millage rate. It doesn't work that way. You're going to have to do each individual basis tax, and the multiplication is going to be, you're going to take the decimal point and move it over one to the left because it's per thousand of the assessed value. So if you were to take this number times 0.360%, that's how you're going to get $22.98.88. Okay. Now it's going to give you the amount anyway. And the reason I'm going into all of this is because for newer construction, which is becoming more common, especially in Florida, the millage rate is the only way you're going to be able to quantify what the end taxes are going to be, because this will not have been reported. Okay. I know this is a little bit convoluted, and when all else fails, if you just are not getting the data, you can't find it, it's not computing for you, all you got to do is call the county. Usually you'll get them on the first try. They're individual counties in these areas. They're not overrun with, volumes and volumes of phone calls. You'll usually be able to get somebody on the phone immediately, and you can give them an address and they should be able to get you a number. So when all else fails, you can just pick the phone, call the county tax assessor's office, boom, you should be good to go. Anybody have any questions about that? Pretty simple overall. So two options, okay? You got your millage rate here. You can figure out if you find the county tax assessor's website, punch in an address, you should be able to find it. It should just give you a total, and that will be the confirmation. If it's new construction, there's going to be a millage rate per thousand. You're going to calculate it that way, or maybe a simpler way, if you've got a 1 or 2 or 3 off per month or so, just email info@ridgelendinggroup.com and we will produce or pull a property profile for you that will, in addition to the taxes, it's going to have other useful information that you may need about the property. In fact, we can even get kind of fancy with it and give you all kinds of demographics about neighborhoods and crime and all kinds of cool stuff within that property profile, which is public record for the most part. You just have to know where to look for it. Okay, Q&A. Anybody have any questions about any of that? Jag's got a question. Okay, how do we calculate assessed value? So Jag, that's exactly what you're going to do on new construction. Is you're going to take the millage rate, and you'll find that same thing. You got to go to the county. If you have any issues finding the millage rate, This is the millage rate. Well, in this case, this is the total of the millage rate, but you're going to need to do it individually per the tax times the purchase price, right? The sale price. And that's how you're going to figure out what the taxes are going to be, or confirm what the taxes are going to be after construction is complete. It'll be via the millage rate times the purchase price. And that's how you're going to get that. But again, you're gonna, if there's more, and very rarely are you going to have property taxes in any county. There's just one number. It's going to be a collective of all of these different criteria. So do them individually, and it should be broken out just like this, so that you can get that final number.
Jack asked, so we will assume that the sale price is the assessed price across the lot.
Yes, that should be the case. Yes, take the sales price on new construction, and that's how the county tax assessor is going to be from the sale. That's the number that's going to be used initially to calculate the taxes. That won't always be the case going forward, right? As they're reassessed annually or every couple of years or whatever, but yeah.
She asked, would this also be the case for rehabs?
No, it shouldn't. You should be able to just, yeah, it should be just through sale. I can't think of an instance where, no, unless it's trading, unless it's changing ownership, it should not. Rehab should remain the same, and you should be able to pull that online. You know, you guys can get for existing properties too, easy enough to get a quick baseline from Zillow or Redfin or whatever. In some cases, if you want the exact real-time valid number, you want to go to the county tax assessor's site, and you should be able to pull it off there. Okay. All right, before we move on to kind of top of mind stuff and the market conditions, interest rates, everybody's favorite topic, is there anything that you guys have for me that has come up personally, relatively, anything that anybody's got questions about, scenarios, product questions, anything like that? Okay.
Oh, hi, Caeli. This is Monty. I have a question.
Hi, Monty.
Hi, I recently bought a property mid-year, and I was wondering if you could kind of do an overview of like how they calculate the supplemental bill and how that all works.
Are we talking about the taxes?
Yeah, the property taxes.
I'll try. Give me the scenario, Monty.
So I bought a fourplex in, let's say, September 30th.
Okay.
And so I haven't looked at my closing statement since I signed it, but I know there was something with property taxes on that.
Okay.
And since I bought it essentially cash, I'm just coming up on my first payment, December 10th in my county. And it's still got the old property owners loaded onto the website of the county. And so if I don't have to pay the whole amount without going down to the county, I don't want to.
Sure. Okay, so yeah, I think I can address this one. So first of all, a lot of times the county, there's going to be a delay between what shows up on the consumer side when you're doing a search for the owner of record. It's not going to be instantaneous. So the day that you close or the next day or the next week, it's not automatically going to show you as the new owner, but it is in the system, and the time stamp of the date that you took possession of the property will be obvious and relevant. Now, I'd have to take a look at the closing disclosure to tell you for sure, but what I can say is that from the date, and this is all going to be relative to the individual county and what that property tax year says, and most of them are going to vary pretty wildly. So depending on those variables, okay, and if you want to, Monty, send me the address, and I'll see if I can get you more exacting information. But from the date that you took possession, right, the date that you closed on that property, you became officially the owner, you are now responsible from that moment until the end of that property tax year. And within the statements that you're going to be getting, well, first of all, within your closing statement, even though you didn't have a loan, you're going to have probably paid from that moment until the end of that tax year. So you'll start getting statements from the county that, taxes are due, and they may be due quarterly. semi-annually, annually, but you'll be getting notification from them when they become due and what those amounts are. And a lot of times, guys, you'll have an option. You may have a small discount. You may receive a small discount on the annual property taxes if you pay them all in full versus breaking them up into quarterly, or semi-annual payments. So there may be some incentive to do it that way if you've got the extra proceeds to do that. But if Monty, tell me if I'm not answering your question. They're going to have a record of what you are responsible for. Chances are you paid for what that was at closing, and then they'll become due again whenever that county year or that tax year is relevant.
Yeah, that was as much as can be expected for you to know about my situation, I suppose. I just need to get out my closing statement and see what was on there, and then, God forbid, go down to the county and walk in, wait in a line.
You won't have to. Just if you want to send me the closing disclosure, I can kind of help you, and then I can pull up on my end what the tax year looks like, and give you an idea. Otherwise, we certainly do not have to march down there. A phone call would get it done if we can't figure it out on our own.
Okay, thank you.
You
And
bet.
I've got your address here, Monty. I'm gonna send you an email with Caeli attached there afterwards, so you guys can talk about that more if you need to.
Thank you, Mrs. Smith.
Of course. All right, Ron Betts, you had your hand up first, so why don't you go ahead?
Hey, yeah, thank you for taking my question. So, one of the questions I have, it may seem simple, but tax statements just came out. I'm in Albuquerque, New Mexico, and the question I have is disputing the tax rates. Can you speak a little bit about that? I know as the rates go up as the property appreciates, and I don't really know a reason why for investment I would want to dispute that. But could you speak a little bit about that, Caeli, please?
Yeah, no problem, Ron. And there's no too small or too big question, guys. Truly, that's what I'm here for, is to answer best I can. There used to be a thing where, and this is years and years ago, where it was kind of a loophole. Investors could write letters, and I don't remember that being hardship letters, but there was a certain formula that you could use to get with the county to see if you were eligible for a reduction in what your property taxes were. And it was kind of a little hack that you could use to save a little bit and potentially increase your cash flow on the property. A lot of it is going to have to do with homeowners exemption. And I'm saying that wrong. It's another term, and I'm totally spacing on it. In any case, I think that it's just as easy as saying, write a letter to the county and dispute and say, I need a break on taxes. I'm not able to afford the property taxes in this area. What are my options? It's not going to change from one individual to the next. So if there is something that is of consideration within that county, they have to give you exactly what needs to be requested, or the portal in which you have to put the request in, et cetera. So it's a kind of, I think it's a no ask them, no get them. I do not believe that it's going to be dependent upon, unless you're a homeowner, in which case that's a different conversation. But for investors, I think it's just an ask. And what is the process to request a reduction in property taxes, or is there a way I can dispute the assessed value that's used to calculate these property taxes? And it should be pretty straightforward, clear cut, and see if it's a possibility. Is that helpful?
Would you recommend that, or just ride with it since it means that the property is going up in value?
No, I absolutely, I would request doing it. If you can save a little bit in the taxes, for sure. The tax assessed value has nothing to do with the fair market value that you and I care about for appraisal and harvesting equity or selling or that kind of thing. But for tax purposes exclusively, that tax assessed value is very, very different, and one isn't necessarily going to bleed into the other. Yeah.
Thank you.
Good question, Ron. Thank you.
Perfect. And I think Jag, you had your hand up next, so why don't you go ahead?
Yes, thank you. Hi, Caeli. Thank you for doing this.
Hi, Jag.
So I had a couple of questions actually, or one statement. When I bought a property in Cleveland, it was a turnkey. I bought it off a pro forma, and the tax on that was meant to be around $5,500. When we got into the tax year, because I closed in November, so the next tax year, I got a bill for $15,000.
Oh,
And
I think,
how
did we talk about this? Was that you? I feel like
yes, that was
maybe.
me. So I'm just curious how that could have even happened, that the mortgage company couldn't pick up on that. The turnkey company that did the pro forma didn't, and of course I was a complete green investor completely at that stage. So just to pass that horrible story on for what it's worth.
That is horrible, right? I mean, that takes what your performance and what you were expecting on this property and
I was negative cash flow right away.
by a lot.
By a lot.
Not a small amount. It sounds like I'd need to do a little bit more investigative work with you on this, Jag, but it sounds like there might have been delinquent taxes, and that doesn't make sense either because
No.
you know, taxes take first lien position, delinquent taxes. So you're telling, let me just make sure I understand. So 5,000 is what it was slated at.
Right.
And even at the time that you closed it, it was 5,000 and
the escrow and everything. Yes.
And then that went up by $10,000 just a few months later, the value.
We disputed it. And the only reason we were able to get away with it was because the turnkey company hadn't done the rehab. So we were able to show that there was vacancies and we weren't, we didn't have the income to support a 15K tax on the property, and that the valuation was all wrong. Like I paid for a turnkey property, which I didn't get.
Right.
It wasn't performing, so they let me have it. Right. So they were like, okay, we get it. But it's interesting that the school district was saying that you paid X amount, so therefore your tax should be 15K.
Well, okay, so that makes more sense then. So in that case, guys, what's happening here is that the taxes of the property as they exist right now are based on the value, the value as it's gone up from the time that it was purchased, but it started at that purchase price, right? And taxes are going to continue to increase based on a certain margin. But from that time until Jag, you bought it, if we go back and look at the transaction history, that initial acquisition price to when you bought it, I bet was a huge margin, correct?
Correct. But Caeli, what happened is even in the pro forma that took into account the new price, the taxes weren't shown to go up that much. Because if they had gone up to the 15K, nobody would have touched the property.
Right. So the turnkey obviously dropped the ball, but it's and escrow wouldn't have caught it yet because it wasn't reassessed.
No, but nobody thought about checking. Like, I guess escrow didn't check that the property tax calculations were correct. And the mortgage company didn't check it either because they'd be escrowing for it. So the DSCR, or you'd look at, could the property actually pay the taxes, right? Can the rent pay?
Sure.
It couldn't.
What I think I'm hearing then, unless I'm misunderstanding another detail, is that the turnkey did not account, because escrow is going to give you what the taxes are now, okay, as they exist today.
Okay.
Going forward with the new, it's got a new value. The property was now sold at $1 million, and the first time it was sold, it was $500,000, whatever it was.
Right. Mm-hmm.
The pro forma is based on today, and the county has reassessed based on the new value. That would not have come up there. It should have been the turnkey's responsibility to have met with that.
So what the lawyer said, he said that in fact, that that based on the new value, the school district had calculated the right percentages. And in fact, what they were looking for was correct, except that because the value was not justified, since the rehab was not complete, we didn't have to pay it that year.
Thank God. What about going forward? Is it capped at that, or capped at that level as it goes up incrementally?
So I think I think that at some stage they'll go back to it once the property starts performing. I don't know. I sold it.
No.
Yeah.
Well, so that's just another example of that due diligence, right? Especially if you're just getting into real estate investing. Yeah.
But I had a question for you on that as well. So I invest in Florida as well, and I read somewhere recently, I don't know if it's something that you are aware of, that if you transfer a property into an LLC, you're liable to be hit with a higher tax rate. It's a recent change in rules, and I was just trying to get a sense of if that is really correct, because I assume it would impact a lot of investors.
So are we talking, are we talking about the transfer tax? Or are we talking about actual property tax?
Property tax.
I have not heard this.
Okay.
That doesn't mean that normally something like that would have crossed my desk. I have not heard that. Now, I can tell you that, depending on the county, transferring from an individual name into an LLC or vice versa can trigger a transfer tax, like a one-time cost to do that. But it's not to the property taxes. That's not something I'm familiar with. If you find it again, Jag, or if it was a publication or an article or something, send it my way. I'll start checking with our escrow and title companies down there that we work with regularly and see what they have to say.
Thank you.
Yeah, you bet. But speaking of that, transfer taxes, different than property taxes. It's a good little segue or mention. For those that are interested in that asset protection and you want your properties in your LLC, however, the financing, the leverage that you're securing has to be in your individual name and title has to close in your individual name. You are well within your rights to transfer the title ownership into the LLC. Fannie Freddie rules say as long as you hold majority ownership of the LLC, that's perfectly fine. No due on sale clause is going to come up. But make sure that you check with that particular county before you get too far down that road, because those transfer taxes in some counties can be outrageous. Pennsylvania, as a result, is notorious for this. It can be thousands and thousands of dollars depending on the loan amount, where it's a simple pass-through, right? It's your name. I changed it from Caeli Ridge's name and I'm putting it into my LLC name. I'm 100% owner, so it is me, right? There's no difference, no collusion there. Hold on, guys. I don't know if you can hear that, but let's just hang up that one. If I hadn't done my due diligence, but I really needed that property in the LLC for my asset protection, for my peace of mind, doing so could charge me $5,000. So just from that perspective too, different than property taxes, which is what we've been talking about here today, transfer taxes from simply an individual name into a single member LLC or whatever it is can be expensive in certain counties. Not all, but certain counties do impose some pretty harsh transfer taxes. So check that out if you're if you're closing in your name and intending on putting it into an LLC after the fact. Yes, homestead. Who gave me that one? Ron, good, thank you. Exactly, homestead exemption. Yes, that's what it is. Oh, there's my article from Jag. Carly, will you save that for me?
Yeah, absolutely. So yeah, the question Ron had about that homestead exemption, he was asking what might constitute a modification or change to the amount of increase on either a single family residence or a multifamily rental property. He received all his property tax statements and they've increased quite a bit. He's wondering if it makes sense to rebuttal or disagree with the increases, especially as they haven't increased rents, particularly on county assisted residents. So that is the homestead.
Well, the homestead exemption is I think he was just answering my question. That's for owner occupied. Yeah.
Okay,
so
sorry
Ron,
about that, guys.
Oh, that's okay, honey. I'm going to go back to Ron Betts's Q&A. No ask him, no get him, man. Yeah, if you have the time, heck yeah, ask. See if you can get some kind of a discount on there. Is it possible? Maybe. But if you don't ask, you're never going to know for sure. And by how much? I don't know how much we can expect that the decrease might be. But I think the first part of your question, let me just look at that here. What might constitute modification or change the amount or increase? It's annual. I don't know a county that is not increasing at least every other year those property taxes. And I think it's inflationary based. Cost of living goes up, the property taxes are going to go up. I know that I don't know that I've ever had a property where those property taxes remained static for any length of time. So,
and the question with, or the answer with Ron Betzer. That was absolutely perfect. That about nailed what I was talking about. But a question I have also is, who do you recommend I go to with the city or the county to rebuttal that? Is there a certain department or a name of a department that you recommend?
Just go straight to the county tax assessor's office. It may be called property tax assessor. You're going to find it. And if you get stuck, just email me the county and then I'll do a quick search. And then I'll forward you guys a link. It should not be hard to find. So whatever the county is, type in that name and then property tax assessor, and 99% it's going to come up. And then just find out the contact information, call there first and say, who do I talk to about disputing this property's taxes?
Excellent. Thank you.
You bet. What else, gang? Anybody have anything else? No? Okay. Let's then finish with the state of affairs. So the personal consumption expenditures index, PCE is what it's called. There's also something called CPI, consumer price index. They relatively, I'm not going to get into the minutia of that. They relatively produce the same information overall. There are some slight differences in terms of its measure and what it's really looking at. And some of them take energy and food out, and housing can come out, and there's core PCE, et cetera, et cetera. But the basics here are going to be that the Fed Reserve, okay, they focus on both, but primarily they're going to be looking at the PCE. This is going to be published on the 30th of this month. So in a couple of days, we're going to get those numbers. I expect that they're going to be on the downturn. That will be good news if I'm correct for where long-term rates are headed, or at least in the short term where they're going to go. Now, let me quantify by saying, if I'm right and PCE it underperforms, it comes in lower than some expectations, and long-term rates as a result of that are affected to the positive, to our benefit, I want to set the right expectation. That doesn't mean that you guys are going to see massive reductions in interest rate. Probably more than anything, if anybody here or anybody listening has gotten a rate quote on an investment property in the last year, you've noticed that there are extra points associated with whatever rate you're being quoted, right? You've got the lender's compensation, and then there's extra points. It's a function of premium pricing, and in a high rate environment, there is no premium pricing because the services are going to be taking a loss. They know that we're going to be refinancing these loans prior to profitability of the servicing right of these loans. So their extra points are a function of that and covering for those losses. Okay. So if the PCE comes in, the report comes in lower, and we do see improvement to interest rate, I don't know that it's necessarily going to be a direct correlation of the rate itself rather than the points associated. I think we're more likely to see similar rates, maybe 1/8 of a point improvement. I don't know. Well, I mean, we're going to know in a few days. But if the rate for all intents and purposes was 7.5% and it was at a cost of 3 points, perhaps it's still 7.5%, but maybe it's at a cost of 2 points, 2.25 points, whatever it is. So my expectation for the next few days in getting that report and how it's going to translate for us is chances are it'll be more about the points that we're going to be quoted and having to pay versus necessarily a significant reduction in rate. If we do see an actual reduction in rate, I would anticipate it to be a small-ish number, I guess, unless it falls off the cliff, unless the PCE comes in way below anybody's expectation, in which case I guess anything's possible. Maybe we see a 1/4, 3/8, highly, highly improbable to see anything beyond that. But remember, I can't help but remind everybody when we're talking about interest rate, extremely important to do that math, and largely dictated by the loan size. Most of our clients are operating in the space where the loan amount might be $100,000 up to $200,000, in that kind of range. And in which case, 1/8 or 1/4 of a percentage point, you guys, is $6 a month, $9 a month. Please try to keep that in mind. I wrote in our last, I think it was our last newsletter. I think I was having a moment, and I kind of went off on interest rates and shoppers and et cetera. And while I understand as investors, we certainly want to get the best deal that we can. I think people put way too much priority on the actual interest rate, and they're missing out on opportunities that would otherwise be there because they're doing it psychologically. They're not doing it logically and with the math. Anyway, all right, I'll shut up about that. What questions do you guys have on any of those topics, rates or PCE, if I could answer it, or anything like that, or anything else? There's my buddy Ron. Go, Ron.
It seems like the market, the Fed is based the rates off the market. How does the banks and the lenders base their points, whether it be 2 points or 3 points? Who determines what the bank charges for that spread?
So, okay, so what I'll do is I'm going to try and backtrack and start from the beginning. When we're talking about mortgage-backed securities, okay, as a lender, first of all, Ridge is a direct lender in that we fund on our warehouse lines, we underwrite in-house, we do not service these loans. So by a servicing of the loan, that is who you actually are writing your check to and who you send off your mortgage payment to. That is your servicer. A servicer is going to purchase in bulk mortgage-backed securities from a lender. Okay, they are resold in the secondary market, and they will pay a premium for the rights to service those mortgage-backed securities. The premium is typically 1% of the sum of the bundle of mortgage-backed securities that they have purchased. And we know that within timeline for servicers to be profitable, it's about 36 months from the day that they purchase until they're in the black. They start to realize profits from that upfront cost. So as a result of that, and knowing that in a high rate environment that we have been in for the last 18 months or whatever, we know that interest rates, they don't stay up. When they go up, they don't stay up. When they go down, they don't stay down. So we are on the downhill slant, I believe, and most people would agree with that. So as a result, what happens when interest rates start to fall, people are going to start refinancing those loans that the servicer just paid a premium to service. If that loan refinances, it pays off. The servicer has just lost, right? They're in the red. Okay, so they have to hedge. So I think that the answer to your question is it's going to depend on some of the reporting and the data. It's always on a lag. But the margin for which those points are going to be charged is going to be a direct indication of what the secondary markets are seeing for the short term and the long term, and where they think rates are and how quickly or how slowly they're going to meet that baseline. The Feds have been very, very clear that they want inflation at 2%, which, by the way, I'm having a hard time getting anyone to answer me on why is that the number? Why is that the benchmark? I know it has been for a long time, but where did that come from? And why does it have to stay there? Why can't it be 2.2? Why can't it be 2.5? Whatever it is. But they have been very, very clear that that is what they're after, and they're not going to stop until they get there. So they're going to take their formulas, Wall Street and secondary markets, et cetera, are going to take their formulas, and based on the PCE that's coming out, based on the reports or the employment, the jobs report and things, all of that data is going to be collectively combined, and they're going to see from here, I'm sure they've got models and crazy algorithms that they're going to use that say, this is where we're at right here. This is where we were a year ago. This is where inflation was. It was 9 point whatever back in March. It's at 3.4 now. Here are the readings from the jobs report. Here's where PCE came in this month. They're going to take all of that, and then they're going to try and forecast from now and see when are we going to get down to rates of X? How long is that spread between here and here? And I think that's going to dictate, Ron, what the ultimate result for you and paying points is going to be. That was a very ugly, convoluted way to explain that, but that's the best way I know how. Did any of it make sense? Did you track any of that?
Oh, gosh, you're very, very sharp. Thank you. That, at least I know enough to be dangerous, and that
Me too.
helped me understand it better. That's perfect. Thank you.
There's little pieces in there, I think, that come across digestible enough. And please understand, you said that you know enough to be dangerous. I'm in that boat, man. I certainly, I know, because I get to see it and hear it, and I'm in that space more than you guys are. But trust me, I don't know enough to be able to speak as articulately as the guys I'm listening to over here are trying to talk to me about it. And when they start talking, I'm like, okay, slow down. I'm not tracking 3/4 of that. Anyway,
Yeah.
so there you go.
Perfect.
Anybody
Thank
else? You bet, Ron. Okay, guys. Carly, what do we have on tap? What's next? Let's hook them. Let's tell them what we got coming.
Yeah, so you guys are going to be getting an email soon for December, and what dates we're going to have for December are going to be the 12th, which is going to be a live, and then the 26th, which is going to be pre-recorded because it's right after Christmas. We're not expecting a lot of people to be there, or people are going to be busy. But let's see our topics. We're going to have a guest speaker on 12/12. That's the live, and that's going to be Brent Widman. So keep an eye out for that. That's going to be a really good one. Him and Caeli are going to talk about how to round out 2023 and hit 2024 with purpose as it pertains to financial stability, planning, preparation, action, and consistency to help you guys reach your goals. And then on the 26th, for a pre-recorded topic, we're going to be talking about understanding and the risk management involved in non-owner occupied financing. So keep a lookout for both of those. Those are coming down the pipeline.
Thank you, Miss Carly. Okay, guys, as always, we're here on standby. Is there another question?
Yeah, I'm so sorry. I have one
Oh,
more.
that's okay, Jag. No, that's why I'm here.
I was just wondering, I know you had taken the all-in-one off for a bit. Is it available again?
It is. It's back on. It was a short-lived recoil. It's just, I just love that damn loan so much. And as much as I'd like to tell the investor that we sell this to, which makes our lives a lot of times a living hell, our clients included, I'd like to tell them to go pound sand. I just can't do it because I really am such a fan of the product itself for the right individual. So yes, we've had that back. I apologize, Jag, if you didn't get that announcement or notification. It's been a couple of months now. So
so the question also was, I know that recently you had talked about a second lien. Maybe I misunderstood. A second lien HELOC? Would that be right?
yes. Mm-hmm.
That is
Yeah, on
something
investment.
quite different from the all-in-one, though.
It's very different. This is a second lien HELOC. It is in second lien position. Obviously, it does not have any banking features attached to it. It's 5 years with a 25-year repay. Yeah, very, very different product, but the leverage is going to be a little bit less aggressive. So 60% combined loan to value. That's a CLTV.
Yep.
On the
Thank you.
non-owner.
I will reach out to you privately in that case. Thank you so
Okay.
much.
Okay, Jag. Yep, you bet.
We do have one more here. Do you do loans for storage units?
Yes, sir. Yes, ma'am. I don't know who's asking, but yes, we have commercial products that will allow for storage units, commercial buildings, strip mall, mixed use, apartments. Yes, absolutely. Let us know what your scenario is and we'll get you a quote. Okay, guys, I'm out. Happy holidays to all of you. I will be seeing you soon. If you need us, ridgelinegroup.com, info@ridgelinegroup.com, 855-74-RIDGE. My email is cridge@ridgelinegroup.com. We're here on standby as always. Bye, gang.
Thank you very
Thanks for
much.
coming. See ya.
Bye.